In this video, I'm going to show you exactly how I would grow $100 to $1,000, but I'm going to show you the realistic way to do it. Now, a couple things before we get into this. Trading's really risky and most people lose money. As a matter of fact, you trying to do this exact strategy that I'm going to teach you, you are going to blow multiple accounts doing this. Now, that's okay, because if only one of the accounts gets from 100 to 1,000, you make all your money back and you make some profit. So let's say you do this and like the first 4 times you blow the account. You've lost $400, right? You had $100 each time, you lost 400. But let's say the 5th time you try it, you grow it from 100 to 1,000. Okay, now you've made $900 in profit. $900 minus $400 is still a $500 profit. And that's with you having blown 4 accounts, right? You were only right on 1 out of the 5 accounts that you started. So this can be done. It's really, really risky. I don't use this exact trading approach in terms of the risk, but I do use this exact mechanical approach, which is I've been sharing my trades here in my free Telegram channel for the past 8 years. There's a link in the description if you want to check this out. It's just where I share my trades and analysis every day. But check it out. Over the past 4.5 months of me sharing my trades in here, I started a $350,000 account. This is like back October of last year or something. And I've grown it from 350,000 and I've grown it over $300,000 in profit. Okay, so I've roughly like almost doubled this account before swaps and commissions, of course, just trading this exact approach. So this is just risking like 5 to 10% per trade. If you're going to be doing this with lower capital and you're not wanting to only double your account, I say only double your account. If you're wanting to grow it like 5x, 10x, the reality is you just have to risk a ton more. But you have to do it in a very particular specific type of way. So we're going to go ahead and get into that here. If you're new to my channel, glad you're here, glad you're watching the videos. My name is Nick Sean. I've been trading Forex and crypto and stocks for the past 10 years, and I've made millions of dollars in all markets combined. And I've also taught over 4,600 people personally how to trade, how to structure their risk, and how to keep things really, really simple in doing so. This trading strategy is super, super basic and super simple. All we're going to do here is we're going to go to the random.org. And the random.org is just to select a random number between 1 and 10. You're going to be in the TradingView replay backtest mode. I've already got that pulled up for us here. So you go to TradingView, you just click the replay mode. And then what you do is you just select a number between, for me, 1 and 20, because I've got about 20 Forex pairs I trade, and we get number 11. So then what we'll do is we'll go from the top all the bottom, and we're going to take 1 trade per currency pair that we find randomly at some random interval back in the past. So we're going to go here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So that's Euro JPY. And then we're going to make sure we're at the random point. So I've already, like I said, I've already got our TradingView pulled up here. So this is January of 2018. Cool. So we're going to go to the daily chart. The first thing we're going to do is we're just going to find a clear daily zone above and below price. The only support zone we have below price is right here. I don't think that's as clear because we had this crazy move past it. Aside from that, it looks okay. But we also do have this pretty clearly defined resistance zone up here. Now, this next part is very, very, very important. And the reason it's important is because it's going to be literally what allows you to grow the account so quickly. It's going to sound ridiculous, but just hear me out. Like, we're trying to do something ridiculous to grow $100 to 1,000. So of course we have to be a little bit ridiculous in the way we structure risk. You're going to risk 100% of the account per trade. Okay. Now I'm going to show you this, and I'm going to show you step by step. We're going to do it right here on the charts. That way you can see the whole mechanic step by step. And then you can also just follow my trades for free in the free Telegram channel. If you want, the link in the description, right? You could just join that, and like then you can be there in 5 to 10 seconds and just follow it live every day. But you can practice this yourself as well in live markets on a demo account. So the real market environment, but on a demo account. You can also do it on a small live account if you're cool with the risk, right? It's very risky. And you can also learn it right here that I'm showing you here in this backtesting. You can backtest it for yourself. Now, the main thing here is what we want to go to the daily chart. We want to get zones where prices had very, very clear, obvious bounces. Now, you're not going to get many trades, but that's the point, right? We're going to be risking 100% of the account per trade. And then what we'll be doing when that happens is when a trade wins, we'll try to hold it a little bit longer than whatever we lose whenever we lose a trade. So the way we structure this is we wait for price to get deep into a zone first. So going to the daily chart, we draw a clear zone above and below price. If they're present, sometimes you won't find them, right? So you just skip it, don't take anything. But in this case, yeah, we've got a clear zone above and below price. Now we're just going to wait for price to get deep into one of these zones. So you see right here, we get into one of these zones. The second thing we do is we go to the 1 hour chart, and then we see if price is starting to reject that zone. Okay, so on the 1 hour, what are we looking for? We're just looking at any point that price hits the zone and starts to turn around. So in this case, price did come up into the zone, and then when it came up into the zone, it hit the zone, and then it started to turn around right here on this next candle. That is where we enter. What does the candle have to be? A bearish engulfing? Does it have to be an indecision candle? Does it have to be like just any type of bear candle? The thing is it doesn't matter. Like, you just look at the chart. If price gets into the zone and it looks like it's falling away, then you can get into the trade. That could paint as multiple different things on multiple different time frames. I just use the 1 hour. You can use the 4 hour. You can use the 2 hour, the 1 hour, whatever you want. What I'm trying to see is that price is just not getting into the zone and instantly rocketing above it. That's what's most important to me. Okay, so now the next thing we're going to do is, since we're using a daily resistance zone, we want to structure the risk on the daily chart. So on the daily chart, we're going to be using wide stops. And so we want to put our stop loss clear above the zone. And then we want to put our target at a 1-to-1 risk to reward ratio. So in this case, this is what the risk structure would be set up like. Then what we'll do is, as things begin to play out, we're going to watch it step by step. And the moment price looks like it's no longer going to work out in our direction, we're going to get out of the trade. And if the trade wins, we're going to hold the trade. This is what's going to ensure that we have bigger wins than losses. So we're risking 100% of the account. Let's pull up the calculator here for Google. Okay, so we got the calculator so we can track all of our trades. Okay, so we would have entered this trade. Now here's what would have happened. We would have entered it right here. The next candle goes back up. The next candle goes back up. The next candle goes up and then comes down. Then it starts going into profit before making a higher low and then heading back to the upside. So we have a bullish candle here, bull candle here, and then this one goes and breaks above their recent high and closes with a strong bullish close. Since that's happening, that's the location I would elect to get out of this trade. Now, how far is that in terms of relations to our stop loss, right? It's about a third of the way there. So in this case, instead of it hitting the stop loss and blowing the account, this one only goes like a third of the way there, right? So it went a third of the way there. We can close it. We can get out because it's not working. And in this case, we took a 30% loss, right? It sounds insane, but remember, if you're starting with $100, that's $30. Okay, big deal. So we've got $100, and then we lost 30%, right? So we're going to multiply by basically like 0.7, right? Because we still have 70% of the account. And 70% of 100 is $70. So we've grown the account from 100 down to 70. Cool. So that's the first trade. Now we're going to select a random pair again. Do the same thing but with another random pair. So 16, right? So if this was what, 11, I think it was 11 or 12, we'll go 12, 13, 14, 15, 16. So this is Euro AUD. So now we'll go to the 1 day chart, and we'll try to find the next clear zones above and below price. I see a zone up here where that high is, and I also see a zone down here where these lows are. So these are the zones I'm going to be looking to buy or sell at. Now, we're going to wait for price to get up in there. You see I clicked play, so now it went so fast. Did not expect price to get up there into 2 candles. But we're going to do the same thing we do, right? Just the same exact thing. We go to the 1 hour. We'll wait until price first gets into the zone. So it first gets into the zone right here, right there. And then we have a tug away, right? So it tugs away with that little bear candle. That bear candle is where we're going to be entering the trade at. Okay, so we're going to enter the trade right there on that bear candle. We're going to put our stop loss nice and clear above the zone. We're going to give it some distance. That way it doesn't stop out easy. We're going to have a target of a 1-to-1 risk to reward ratio. So in this case, it would have gone into profit. It would have swooped back here into the zone. It tries to get above the zone, but it closes with a bunch of wicks right there. So there's no like strong bullish closure up into that region. So it'd be holding, and we'd still be holding. So let's see what will happen. We're risking, remember, 100% of $70. So it starts to go up. So it looks like it's not going to work out. We need to see if it breaks this high. If it breaks the high, then it's going to dictate a trade that's not going to work out. So is it going to break or is it going to bounce? So it tries to come back to the entry. It's no longer looking as good, but it's still at a daily zone. So let's see if it can knock out these little lows here. Trying to click slow enough here on the 1 hour, that way it doesn't jump too quickly in case we have to manage it. So it does get past the lows, shoots right back up, trying to find support or resistance there. We make a new low, but then we snap right back up again. There's no reason to close it because it's in profit. So we need to make sure we're holding winning trades and we're closing losing trades. So in this case, it just gets back into the resistance. It starts to bounce. Let's see if it'll just move in any direction now. We just need it to move somewhere. Taking a while, kind of going sideways. We got to play it out though. So this time it spikes above the zone. And honestly, that would be a location I close it, honestly, because this got above the little recent highs right there. That would be the location I close it. So that's about halfway to the stop. So now we'll close it there halfway to the stop. Now, this is the reality of trading like this, right? You're going to have losses like that. So we've lost half of the account. So to do 70 times 0.5, the account has grown from $100 down to $35, right? So we've lost like what, 65% of the account. That's going to happen. That's why it's important to do this with a low dollar amount balance, because stuff like this is going to happen. And you're going to blow accounts too. So, I'm not here to hide that. I'm here to show you the reality of it. That way you can actually learn how to do it instead of just seeing butterflies and rainbows and roses and thinking it's all going to be nice and easy, because it's not. So we're going to go to another random pair. We're on 16 right now. The next pair is 16. Okay, well, since we're already here, we'll just select another one. So 12. So we're on 16, so we'll go 15, 14, 13, 12. So it's Euro Canadian dollar here on the daily chart. So Euro Canadian dollar here on the daily chart. Let us go and have some fun here. So Euro Canadian dollar, let's draw the clearest zones above and below price. So we have a resistance zone right there. And then we also have a support zone down here. So let's play it out. See if price can get to one of these regions on the daily. So it does in fact get there on the daily chart. So on the 1 hour, we'd be waiting for it to start bouncing away. So it gets up. This is the first time it got deep enough into the zone. It gets about halfway into the zone, and then it starts turning around right there. So right here, I would say that's good enough to be able to get into a short, because it got into the resistance zone, started to turn around. Very simple. So we enter a sell. We're going to put our stop nice and clear above the zone, very clear area. And then we're going to put a 1-to-1 risk reward ratio. So after we would have entered, price kind of like goes down, skirts against this. It doesn't really break past the zone though. We don't really get any strong candle closures that are convincing above the zone. So in this case, I'm just going to hold it. Let's see if this can actually get somewhere. It tries to go down a little bit further. Narrowly misses the profit target, starts to turn back around to the upside, heads north, tries to break the zone here. We start snapping above. So we start snapping above, but those are pretty small candles here. So I'm going to go ahead and just scrap. I'm just going to hold it. So there we go. We get the bounce, but then it turns back around. It's a pretty weak move, honestly. Plays around, goes sideways. I'm gonna let this one play out. If it gets above the zone and we are able to close it, we'll close it there. But if not, we'll just let it play out. Sometimes it'll happen a little bit too fast. Sometimes it'll happen like whenever you're sleeping, like you're asleep. So in this case, it ends up going to the target. Cool. So we made 100% of 35. So just 35 times 2. The account's now at 70. Okay, so we're still down, but now we're down 30%, right? We're down $30 instead of $65. So now we'll go to the next currency pair. We'll generate a random one. 12. We're going to go down to 7. So 12, 11, 10, 9, 8, 7. This is AUD JPY. So we're going to make sure all the chart drawings are clear, and then we're going to be trading this. So here, let's go to the daily chart. Let's see if we can find a clear zone. What's the clear zone above and below price? I don't really see anything super clear or close by. Let's try this region here. Does this look like it's clear? It did. However, price is kind of like bouncing around the zone a couple times. I'm going to go ahead and leave that alone. I'm going to wait for price to move somewhere new on the chart. Okay, sweet. Now we've got a nice little one set up. So it broke above the zone. Once it broke above and then it came back and tested this area and started to bounce, that tells us, okay, this zone is valid again. 1, 2, 3, 4 touches there. 5th touch there that bounced, a 6th touch that tried to bounce, a little liquidation below it for these candlesticks before it pumped back into the zone, fell away momentarily before getting back above. So now we've come back in here to the zone, and that will be perfectly valid. So we have to go to the 1 hour and find where the entry would have been. So the entry would have been all the way down here, so it gets into the zone. That's about halfway. Let's see where the previous lows were. So the next previous low was like right here. So where these lows are bouncing. So we would have wanted that, something like that to happen. So something like this right here. So where did it start bouncing after that? So it hit this region, then it started to bounce up right there. That would be perfectly fine. So yeah, that'd be perfectly fine to enter. So we'll go ahead and say we entered right here when price started to turn up to the upside. with a stop below the zone. So we have to have a stop nice and clear below the zone, and target above at 1-to-1. In this case, it would have gone down. It would have touched the lows of that zone. I mean, all these previous lows were bouncing right there as well. That's why it's good to have a thicker zone. Gives you a little bit more room to manage it. I can't say I would have done anything there. It got there with some little candles, and it went sideways with little candles, and it started making new highs. So in this case, it just would have been held. Price starts going up further. And remember, I manage these trades the exact same way in my current trading. The only thing different is I'm not using a $100 account risking 100% per trade. I'm using accounts that are hundreds of thousands of dollars, and I'm risking anywhere from 30 to 75K per trade. So, 600K right now, right? 10% would be about $60,000. And I'm running like usually 5 to 10% risk. So some trades are 25K, some trades are 50K, some trades are 75K or more, but it's all within that average region. So remember, it's not 100% per trade. It's usually like a tenth of that max. But that's just because with higher capital, you won't be able to do this. You'd have to just use more steady lot sizes and lower risk. You can still risk high dollar amounts, but lower percentage risk. Whenever you have your $100 though, you can just use the leverage and you can risk high positions. You're not going to run into your broker's maximum lot size limit. So in this case, we grow the account 100%. So 70 times 2, we get the account to 140. So now we've grown the account 40% because we started at 100, now it's at $140. And the fees and commissions are not going to be much because we're trading here on the higher time frames like the daily for finding the trades. The stop loss distance on this is like 130 pips, right? You're not going to be having to use it's not like you're using a 5-10 pip stop and you're having to have an insane huge lot size. With this, since it's swing trading, it makes it easier to get in. You're going to get filled better. You have more time to let the trades play out. You don't have to worry about spreads as much, commissions as much, swaps as much, gaps as much, things like that. It's just easier to swing trade. So we have that one. We're sitting in a little bit of profit. Now we need to go find another currency pair to trade. We were on 7. Now this takes us to 1, which is up here, Euro USD. So Euro USD, we're going to clean up the chart. We're going to make sure everything's nice and clean. And on the daily chart, we're going to be looking to buy or sell to clear zone. So where's the next clear zone? I don't really see one. I see this support right here, but I'm not quite sure how I feel about that zone. Let's see what price does whenever it gets into it. If it starts to bounce, then maybe. Okay, so we get there. Let's go to the 1 hour. Honestly, it looks fine. So 1 hour, price gets there into the zone with a couple bear candles. Pushes up here with this little bullish little candlestick wick with a bullish tail on it. Starts to pop up here. So in this case, I would have been like, okay, the combination of all these candles hitting, stopping, and starting to turn around, this will be good enough for me to get long. So probably here on this candle right here, with a little wick right there, that would probably be perfectly fine. So we'll go ahead and enter long. That candle closed like right there. So that's the position. Put a stop loss below the zone and a target above the zone, risking a 1-to-1 risk reward ratio. And then we'll let it play out. So it starts by going into profit a little bit, then it pulls back around the previous low. Let's just kind of wait and see what happens. Let's see if we can catch something here. So we have a little move to the upside. Need to go a little bit further if it's going to hit the target. Let's see if it can. Narrowly misses it, turns around, tries to have another run up, turns around. All we need to do is just break the highs. It's very important to hold these trades if they're in profit though. So in this case, it does in fact go to the profit target. So cool. So now we've got 140. We're going to multiply that by 2. Now the account's at 280. So remember, we need to keep doing the same thing though. You need to be very predictable and consistent and sustainable with your decisions. Even though you may get excited, you've doubled, you've tripled the account. If you want to actually make up for all the blown accounts, which is going to happen, remember this little account here got down to $35, and we've grown all the way back from that. But you are still going to blow the account at some times, right? Literally the next trade we had taken, if we had closed it, even at a partial loss, you take the account from $35 down to like 15 or 20 bucks. Like the account's basically blown. You might as well just call it right there and just restart a new account. In order for you to be able to make up for all the losses, which, you're going to blow 2, 3, 4, 5, 6 accounts or more before being able to grow an account to the growth target, you'll get lucky sometimes. Sometimes you do it on the first try, second, third try. But the whole idea here is just understanding what the risk is and understanding that you have to keep following the same system, so that way you can let the statistics play out. Otherwise, it doesn't work, right? So you have to do this over and over, knowing that when you grow the account, it's going to make up for all the blown accounts. So we've almost tripled the account. Let's see what we can get here. Let's see what the next trade can bring us. Now we're going to go to another random pair. This is 7. So 2, 3, 4, 5, 6, 7. This is Euro GBP. We're going to clear all the drawings from the chart. I'm going to go here to the daily chart, and I don't see much here. We've got super, super rangy price action. What is this? Oof. We've got that here. We've got these up here. I don't really know about any of these. I'm going to let it get somewhere, and we'll see. See if we can find something. The resistance zone looks clear, but it would need to get all the way to those highs, honestly. So, yeah, so that's touching the previous high. Let's see if we can get a little further. If we can get a little further, I'll look to take it. Spike. There we go. Okay, sweet. Nice deep into the zone. Now we need to wait for the 1 hour to make sure we can get some rejection. And lo and behold, we get up there, bullish spike into the zone. The next candle is a little bear candle heading down. That's good enough. Doesn't have to be complicated. It just has to show that price has stopped, that it's not immediately breaking through the zone. So we've got that rejection there. We can enter right after that little bear candle closes, right? So we have a little tiny cute bear candle. Put a stop loss nice and clear above the zone and a target at 1-to-1. So let's watch this and see what happens. So price looks like it's starting to go against us there. It gets deep into the zone, then it starts to turn around. I'm going to play this out. If it starts cracking that little recent high that it made there on that wick, then I'm going to close this trade in loss. But for now, we're going to play it out and see. Okay, so it went sideways for a little bit, fell to the profit target. So this trade here times 2, 280 times 2, so the account's to 560. Cool. So if we can just win one more trade, which remember, it's not guaranteed. I actually hope we don't win the next trade so that I can demonstrate to you how this still works. But the account's to 560, right? So we've roughly quintupled the account, I believe, like quintuple, right? You've 5x'd it, grown it for $100 to over $500. Sweet, that's over a $400 profit. Very nice. But remember, to make this work, you have to go all the way and follow through, all the way to the growth target, right? If we win the next trade, that's 100%. The account's over $1,000, right? It's to the growth target. You can withdraw all the profits, start again with $100 or $150 or $250 or $200, whatever it is your risk tolerance is. Then you can keep doing this over and over again. This is how I made a lot of money with a small amount of money going back into like 2018, like mid-summer of 2017, basically. But like 2018, whenever I first started getting profitable, but I had small dollar amounts. This is how I was able to start compounding my capital with a small amount. You have to do it with high risk and low dollar amounts when you start. Then once you get a high dollar amount, you've grown a lot of trading capital. To preserve that and make tons of money, you have to then preserve that by doing lower dollar amount risk and lower percentage risk, but with higher dollar amounts of trading capital. That's why you've seen, like in my Telegram, like all the trades I've called the past 4.5, like close to 5 months, right? I've made like over $300,000, right? And that's just with a $350K deposit. And that's risking like a tenth of what I'm risking here. And oftentimes less than a tenth. Like I'm risking like 5 to 10%, right? So it's 1/20th to 1/10, and I've still doubled the account in like 4 months, made $300K. So let's go. Let's see if this will be the last trade or not, right? It'll be interesting if it's not. So we were on 7. Now this is number 8. So the next pair from 7 to 8 is AUD-JPY. So this is the 8th pair. So we've got this in here. We've got this little nice little cute zone here. Let's go to the daily chart and kind of have a look at what's going on here. So we've got this nice little cute trade. So let's see if we can find an area. So this zone looks pretty good overall. Let's go back here, right here to this little area. Lows. Yeah, I mean, technically it's fine. Technically it's a perfectly fine zone. So when price is here on the 1 hour, we're going to wait for price to start bouncing here. So it needs to come into the zone. We have a little bit of a bullish rejection right there, but that's just a bullish rejection on the same bear candle that was pretty deep. Let's get a little bull candle going in our direction. And if we can get that, this will be a worthwhile trade. That's a little bull candle. That's a little bit bigger. I'd say this is ready. Okay, cool. So we'll take a trade. Let's enter a buy here. We're going to put a stop loss, remember, nice and clear below the zone. We really want to give ourselves some room here so that we don't get stopped out, because we don't want to risk, we're going to be losing all of our profits if this doesn't work out. So we've entered the trade, put a stop nice and clear below the zone. I'll drag it out just a little bit further. And we got a 1-to-1 risk reward ratio here. So what we'll do is we'll start playing it out. So it goes into profit a little bit, little by little. Tries to bounce. Starts going down. So let's see if it breaks that little recent low right there. Doesn't. It starts to bounce up again. Then now it goes here. This looks like it might be breaking the next low. Let's see. It starts to go sideways. There we go, a bear candle. So This, I'm going to close this here. I'm going to elect to close it. Now, how far is that on the way to the stop loss, right? I'm going to say about maybe, what, 20 to 25%. Let's just round it up. Let's just round it up and say it's like 25%. That's about a fourth of the account, right? So we're going to lose about a fourth of the account here. So we're going to do 560 times 0.75. So it's 420. 420, cool. So we got 420, and then we're going to pick a new pair. In fact, let's just see what would have happened here. So this would have gone almost to the stop. We probably would have had to close it anyway down there. And then it ended up, what would it have ended up doing? It would have almost hit the stop there. This one looks like it would not have worked out, but let's see. You never know, right? Okay, would have gone back into profit. Gone back down. You would have been sitting in this trade from the 10th of August to the 24th of August here. So 2 weeks, almost 3 weeks. Goes up, goes sideways. Yeah, I mean, this just would have been a drag holding on to it. And then look, after all that, it would have still gone and hit the stop loss on the 31st. So that would have been, yeah, it would have been 20 days. So like, that's quite a while. So, I mean, you know, that's that. That would have stopped out. So it's good. Instead of us losing the whole account, blowing the account, we only lost a fourth of it. So we're still left with quite a bit of profits, right? The account is still 4x'd. Okay, cool. So now we're going to move on to the next trade. We're going to select another pair from random.org. Number 6. So we're going to go Euro GBP to AUD USD. This is number 6. We're going to clear all drawings to get it nice and clear. We're going to go to D right here, the daily chart. Now, I don't really see any clear zones here in this region. As a matter of fact, actually, we've got this right here. Let's see if we can pop a little bit deeper into this region, though. Okay, that looks decent. That looks like it gives us a good opportunity. You know, that gives us a great entry. So it gets into the zone. It got really deep into the zone right there. That one almost did. This is basically okay. But in situations like this where we've almost got the account to the growth target, we want to be real picky and selective. So this comes in, rejects. We get a little bit of a bull candle. Let's go ahead and go for it. So we'll enter a bull. We'll enter a buy right there. Put a stop below the zone. And then we'll put a target above the zone at a 1-to-1 risk to reward ratio. Cool. So we'll do that. Let's play it forward. We're going to do it nice and slow so that we can manage this if it goes against us. Goes against us a little bit. Doesn't break the zone. Doesn't look like anything too compelling. Now we're kind of going sideways here, patching sideways. She's not finding any buyers right now. We need these recent highs to get cleared, which they don't. As a matter of fact, the recent lows barely get taken out with a wick. And now we get price coming down a little bit further. In this case, we could still bounce because we're in the lowest region of the zone. I'll tell you what, if this next candle gets broken, we'll close it right there. So it does. So as soon as that candle would have gotten broken, that right there would have been where the closure would have been. So let's see, how far is that to the stop, right? It's, in this case, about maybe like, we'll just say half, right? Yeah, I think that's fair. It's like halfway to the stop, a little bit less maybe. We'll just say half, right? Just to be more than fair. So we lost half the account, so now it's 0.5. So now we have we've taken the $420 account back to 210. So remember, we were at $500, like 560. One more trade would have had us grow the account to the target. Now we're only at $200, right? We've still doubled the account, which is crazy. But like, that's why it's important to manage the trades, because otherwise it could like blow the account really easily. What would have happened after this? Would it have gone back up or gone down? I don't know. Let's go pick another random number and we'll check back and see. So 6, so now we got 19. So we'll pick the 19th pair. So in this case, it gets back above the zone. Tries to go up. Yeah, so this one looks like it probably would have headed up there and hit the target. Well, cool. All right, well, we got out of that, so it is what it is. You never know. The last one would have gone and hit the stop loss. We would have blown the account on the last one, but, you know, we were able to save the account. So this is, the 6th pair. So we will go 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So 80 Canadian dollar. So let's clear the chart, get it nice and clean. We'll go to the daily. Now, this is another one where I don't see many zones. Let's let it play out a little bit further and see if we can get somewhere. Okay, sweet. Oh my God, no, it already played out. Okay, well, let's see if there would have been a trade there. Let's just even see if there would have been one to begin with. Damn, I should have marked that up before this happened because now it's already painted it. So it first gets into the zone, gets into the tip of the zone here, a little bit deeper here, but not quite enough. Then we have a straight bear run down here. Then we get like below the zone here. Then we come back above. This is strange. This is some really strange price action. Oftentimes, if it looks like it broke outside the zone, even if it comes back in, I'm very reluctant to take a trade. However, in this case, it got above the zone, and then it came back into the zone here and then started to bounce. So this right here looks reasonable for me. Just because it broke back above the zone, it showed there was bullish strength and it fell back in. So let's see. So right here, it comes into the zone, and then it starts kind of going up right here on these two candles. I'm going to say that would have been a perfectly fine trade. I can't believe I clicked too fast on it. It got there so quickly into the zone. Look at how quickly, like, on the daily, like, it just rocketed down. This is the 1 hour, but on the daily, it just happened so quick I couldn't even pause it in time. So we enter there. We have to have a stop nice and clear below the zone. Target at 1-to-1 risk-reward ratio. And thank goodness this one would have hit. That one would have hit relatively easily, even if the stop was a little bit further. Well, that is fair enough. But yeah, that is a pretty clear zone here on the daily, isn't it? Price bounce there, 2013, here in 2015, here in 2018. So cool. All right, fair enough. So that one would have been a nice win. I'll multiply that times 2. The account's at 420 again. Cool. So we've grown the account back to where it was at before the second to last trade, or whatever it was. We'll select another pair, 19, so we'll go down to 15. So 18, 17, 16, 15, CHF JPY again. So we're here in the daily. Let's see if we can find a clear zone. I don't see anything clear right here. Let's let it play out a little bit more. Let's let it get somewhere new on the chart. Remember, you're going to have so many trading opportunities on all these. This is January of 2019, so wild spike right there. Don't really see any clear zones at the moment. It goes up, it goes down. We're starting to paint a little bit of clarity there, but it's still pretty tightly ranging. I want something super clean, like a quick bounce into somewhere. So that way we can kind of see which way it might go. Okay, so in this case, it does get here into the resistance zone. And for the resistance zone, we can be able to take a sell right here. We've got support there. We've got resistance here. Yeah, this looks fine. Looks perfectly fine. Cool. So we'll take a sell there. It gets into the zone, not quite deep enough. Let's see if we can get a little bit deeper of a push in there, then we can enter. So in that case, it looks like it doesn't. Starts to come back. Let's see. Looks like it's probably just going to continue down now. So it continues down. We might be able to get another test from right there. Cool. So we do get another. Shit, it already went away. Okay, so it already went into the zone. We got another test. It started to bounce away. I'm going to say right here after this little bear candle, right? Just like I said, we were waiting for another test to the zone. That happened, right? It came tested right around where the previous high was. Started to bounce, so we can go ahead and enter a short position right there. So we'll go short on it right here. We'll put a stop loss just above this zone. It needs to be all the way above the zone. Profit target has to be 1-to-1, so it's going to be quite the target here. So that'll be that. And then we'll let it play out. We'll see which way it would have gone. So it comes back up to the entry after going into some profit. Let's see which way she wants to go. Is she going to play hard with us, or is she going to keep going? So we're going sideways. Keep on going sideways. Looks like she's trickling up. Anything could happen because it's at this major resistance level. So it could rocket past it towards the stop, or it could fall towards the target. Our stop's in a very safe location. It's pretty far away, so we'll have plenty of time to manage it. Yeah, so CHF JPY. So really testing the patience here, going sideways. A little bit of profit. We need to knock out these lows to get a final little push towards the profit target. Looks like that doesn't happen right there at least. We get back around the zone. We go sideways. Now we're breaking these little recent highs we made. We're testing the little highs that were back here. If it starts cracking those, we might want to get out of this one. So what's it going to do? Got all these higher lows forming. She tries to break lower. This is super rangy. I mean, there's no reason to close yet, but super rangy. So in that case, she tries to go for the highs again. She pulls back. Wow, it's kind of rare that stuff is like this sideways. So we go back down into profit. We need to really have a break past these lows for this to move. Barely breaks the zone, comes straight back. Barely breaks the lows. Looks like she's trying to make a lower high. We just need one more little jolt downwards to have the profit target met. And that does end up happening here. So this one took a little bit of patience, but keep in mind, it didn't really go into drawdown, right? It went around the entry back and forth multiple times, didn't really go into drawdown. So for that right there, this counts as a win. So we've got, what is this, times 2? So we're hitting the home stretch here, right? You know, you've sat through this whole video, you've watched it, you've seen it all step by step. We're here in the home stretch. And remember, keep in mind, like, I don't just do this in back testing. I do this like live every single day, calling my trades, sharing my analysis, the outlooks beforehand, the recaps after the fact, recapping the trades. It's all there in the Telegram channel. So you can see all this for yourself. These are all the trades that I've showed here in the Telegram channel. This is the P&L from it. Like, every single thing is documented here. So, you know, I'm not like a replay king. I know I look like a king with this beautiful long hair right now, but I actually do this live every day, and I have been doing it for 8 years there in that free Telegram channel. So yeah, this is great. Cool. We got a nice little win. So we got to win like one more. We might close it at a partial profit if it starts to win. We've grown the account almost to the $1,000 growth target. So let's just do the same thing like we were doing. 16. So we're on 15. So we'll go to the next pair, which is GBP AUD. We'll clear all the chart drawings. It looks like there's no chart drawings to begin with on here. Go to the daily chart. We're going to find the next clearest support resistance zone above and below price. I don't see anything right here. All we've got really is that high and then this low. I don't think that's enough to like rely upon for a good trade. Let's zoom out just a bit, see if we can find anything here. Yeah, we need more price action to get painted. Okay, sweet. Damn it. Look at how fast these spikes happen. So this is a resistance zone right here. There's a high right there where price basically got there, then bounced away really, really quickly. So the daily chart, yeah, that's like, imagine me trying to pause that again, thinking some shit like this wouldn't happen again. So it gets into the resistance zone. Is there a way we could have entered that though? On the 1 hour, not really. It spiked deep into the zone. It pinned away. This looks like it was in March of 2020, right when pandemic was happening. This is when all these COVID spikes happened. Just given that market environment, I made so much money in March and April of 2020 from all the wild pandemic movements. Like, things were just flying around all over the place. It's hard to say I would have taken a trade there to begin with, but even just based on the technicals, that closed all the way down here. I mean, you're missing a good entry inside the zone with a good risk structure, and the target has to be really far. It came up here again. Would it have given us another entry? It came up here into the resistance zone, but it kind of spiked past it, and then it came back below. So what we'd need it to do something like coming back below and then popping back into the resistance. Let's see if it can pop back up there, but like deeper into the zone, and then give us like a nice little setup. Does it go deeper in the zone? So we get a little deeper there. Let's see if we can get a little bit more further up. Yes. Okay, sweet. So we get further up, starts to tug back away. This looks like it would be kind of difficult to be able to take a trade off of that because it goes back down quickly, yes, but it goes all the way here, and now we get painted with a bullish wick. We go up a little higher back into a reasonable entry for the zone, then we start tugging away. This right here is what I'm going to call good enough, right? It's good enough to enter. We're just going to use a wide stop. So we're going to enter that right there. We're going to put a stop loss just above the zone. We're going to put a target right here at 1-to-1 risk reward ratio. So let's see which direction this one goes. I'm going to play it out candle by candle. Starts to go up, starts to go down. Let's see what we're doing here. So it looks like it's making a higher low. Then it's spiking up deeper into the zone, then tugging back. Then starting to reject a little bit right here. In this case, I'm just going to go ahead and say I'm going to scrap it right here. This is 1/5 of the way to the stop. So we lose about 20% of the account. So that would mean if we go here, we'll be left with 80%. So this is times 0.8. So we're still left with $672 in the account. So in that case, it's fine. Let's actually see what would have happened. So in this case, it would have played around here, gone sideways, started to head lower, lower, and lower, barely missed the profit target, and then it would have actually hit the profit target. So this is one of those examples where it would have worked out, right? But we do have to control risk. Imagine if it hadn't worked out. If it hadn't worked out, it would have gone and hit the stop loss. It would have blown the entire account. Everything we'd worked hard for. Growing the account from $100 to almost $900 just to watch it all get blown. That's why it's very important to control and structure risk. So let's see if we can get to a new region here on the chart where price might bounce. Another clear support resistance zone. We have a zone down here. Like we've got some lows right there that might function as support. Let's see if we can actually get there. I'm going to try to stop it if it gets there real quickly, but in the interest of time, I don't want to click through the daily chart candle by candle. It just takes so much time. Okay, so we touched the zone, but we didn't really go deep. That one touched it again, but it didn't really go deep enough. Let's wait for it to kind of get a nice, okay, here we go. This is starting to be interesting. Can we go a little bit deeper than that? I want a little bit deeper of a touch than that. It doesn't give us that nice little satisfaction of a good test into the zone. Let's wait for a little bit more. We're here at a resistance zone, but I don't know how I feel about this resistance zone. It seems like it's too small. It's not like big enough moves away from it. So in this case, price gets above that resistance zone, starts heading higher again. I really don't see anything here super clear. Some would argue this is a support resistance zone, but I just don't like stuff where price whips past it over and over. I like stuff that's real clear, real easy to define. Okay, sweet. So we're back here again into the support zone. Okay, now let's go to the 1 hour and see if we would have gotten a setup here. So we get into the zone. This is the main area it was before. We would need a deep test into the zone. Something like down here, right? I avoided all the other trades that were taking place up here further back, just for that reason. So now that we're deep in below this zone, let's see if we start trickling back towards the upside. Okay, so we start heading back to the upside. Let's go back to the daily and see what the daily candles are closing like. Yep, and we get a bullish close up into the zone in the daily. So, I'm going to say given the totality of the circumstances, it tested deep here into this zone all the way down to that previous wick low. And given the fact that once it did that, it started to go up again. I'm going to say, we could have entered right there, probably after the daily candle close. So the entry would have looked something like this, right? So it gets down in there, starts going up, closes somewhere here on the daily probably. We're going to say it broke these little recent highs right here, all these little recent highs. So right after it did that, we'll say it could have entered like right there when it starts heading above the zone. And again, we're just waiting for price to go into the zone deep enough to be able to enter and then start to be pulling up a little bit further. So let's see which way this trade would have gone. So we're going to put a stop below. And then we'll put a target above at 1-to-1 risk reward ratio. And we're going to see where this would have gone. So this is currently halfway to the profit target. Let's see. She would have gone up. Ooh, this might be an easy one. Let's see if she turns around right here near the target or continues. Everything's on the table. You can feel your heart racing. You can feel the fear and anxiety from narrowly missing your profit target. Okay, what does she do? And she goes up there and she meets it. Okay, sweet. That's why it's important to not close winning trades early most of the time. And that's why it is important to close losing trades early most of the time. If we hadn't been doing that, we would have for sure blown this account, I think like 3 separate times. But instead, this trade wins. And so 100% of 672, this grows the account to $1,344, right? So after fees and commissions, this is for sure going to have at least 10x the account, right? This is assuming you have like, what, $344 in fees? I mean, like, that's just really, really overestimating that there. That's like 40%, right, of the original $100 deposit. I'm sorry, that's a lot, way more than that. Anyway, avoiding all that, we know for at least for a fact, after fees, commission swaps, things like that, you would have been able to have 10x the account. Now, I've showed you examples here because I've been doing this for so long. Like, I know how to use my discretion and intuition and price action discernment and examining the context to like get in and out of trades. That's why it's important for you to follow my free Telegram channel so you can see all my trades in there every single day. It kind of helps you develop that experience. But this is me doing it. Yes, it took us some time here to show and demonstrate this in the backtesting mode. Live trading obviously will be, pretty different. I mean, you can still model the same concepts here in backtesting and the same risk structure, the same parameters, and you can practice it for yourself. But this is a way of showing you how, yes, you can grow an account from $100 to $1,000, but it is going to be a pain oftentimes, and you're just going to have to accept the fact that you're going to be blowing accounts like multiple times, oftentimes consecutively, before getting to a winning account where it grows all the way to the growth target. But again, we did this here on the first try on the account. I thought this account was going to blow after we cut it down to 35. But if you're really looking at this, we took the account from $35 all the way up to over 1,000. That's pretty wild, right? $35 to like 1,300. That's pretty insane. But from the starting balance, right, it was 100. So we dipped below that, lost a lot of it, and then we're able to grow it from 100 to over 1,000. That, my friends, is how you realistically, actually, literally grow an account from $100 to $1,000, or in this case, even more. So if you made it here to the end of this video, great. If you like this video, awesome. I appreciate that. And if you have any questions, let me know in the comments below. I'll try to respond in the first 24 to 48 hours. Appreciate you watching. I'll see you in the next one. Cheers.